Hi there, I am Julia Frohwein, joined by Judah Levine, our freight expert. Welcome to today's episode of Container Bytes, your 10-minute update on the latest in freight. Judah, how are you today?
I'm doing well. How you doing?
Yes, I'm also doing well. All right, let's get going. So let's start with the Strait of Hormuz for a change. There have been multiple examples of attacks, Iranian attacks on vessels in the region over the last few weeks, despite the start of the ceasefire. The aim seemingly is to deter transits through the strait, other than its own channel. And just yesterday, even we had some more serious escalation, including US retaliations. So we've said here before that the biggest impact for freight markets isn't really the blockade of the vessels, but actually the cost of oil and bunker fuel. So a price is going up as a result of this, renewed escalation.
So prices have gone up a little bit just in terms of the latest kind of back and forth, as you mentioned. But really, more or less, oil prices are back to where they were pre-war. And in fact, there has been kind of a surprising rebound or a surprising speed at which oil prices have gone back and oil supply has recovered. So, there are these starts and stops. Traffic through the strait is not back where it was. Some days it reaches maybe half of what it used to be, but most days less. But nonetheless, the release of those volumes, plus just the fact that over time, the energy industry has been working to find alternatives to passing oil just via water through the strait, and also just alternative sources of production and releases from strategic reserves and everything else. So there's actually now concerns of oversupply of oil when the concern this entire time was that there was going to be a shortage. So really we haven't seen that impact oil prices very much, even though we're seeing kind of deterioration maybe in the strait, but we're seeing oil prices back to where they were. For bunker and for jet fuel, we've seen prices come down too, but they still remain elevated above where they were because these are refined products. So it takes time for crude oil to reach those markets and then become refined products that reach the transportation industries. So that seems to will be taking a little bit more time. Fuel prices are certainly down from where they were initially.
Okay, so does that all mean that container prices might start easing soon also?
So once the bunker fuel prices go back to where they were, that will remove one element of upward pressure on rates. But right now we're really in the thick of peak season for ocean container market. And so even if fuel prices dropped, you probably won't see it reflected in the prices very much. So we had prices for the Transpacific increase by about $1,000 to start the month of July. They're up about $3,000 compared to the very end of May. So we've had an early and strong couple months of peak season so far. There are different reasons for why this is coming early, as I think we've mentioned here before. One is there these tariff deadlines in just a couple weeks and for the U.S., and so tariff levels will probably increase for imports from many countries. We also had big fuel adjustment factors, so kind of quarterly fuel prices that some of the big shippers pay. Those are increasing to start July, so that was one factor. We also had manufacturer prices that adjust quarterly that were going to go up. So we had various front loading for various reasons. We've seen this big increase in rates. For Transpacific rates, the West Coast are about $6,700 per 40-foot container. To the East Coast, $8,700 per container. Carriers are adding capacity to these lanes, so that shows that ships are full. That shows that demand is strong. And there are additional increases announced for July, for mid-July, some very significant ones. But there are also kind of talk within the industry that maybe we're already reaching the peak of demand. And so maybe we'll see prices increase middle of the month, maybe we won't, maybe they'll kind of stay elevated, but towards the end of the month, there's expectations that we might already be past that peak because it started so early.
Okay, and what about Asia-Europe? Is it a different story there?
So a similar story. Rates increased likewise by $1,000 per container to start the month. They had increased by about $2,000 compared to about $3,000 on the Transpacific over the course of June. Rates are very elevated. They're almost at $5,500 Asia-Europe and $7,100 Asia-Mediterranean. So these are really elevated prices. Similar story that carriers have added capacity. There are record levels of capacity right now. So that shows that rates are high and capacity is high. That means that demand is strong. But likewise, there's talk here that maybe the mid-month increases won't take to their full extent or won't take at all, and that we're just about at the peak of demand because there's an early peak season here to So if we saw an early peak season for Asia-Europe as well as the Trans-Pacific, it means that tariffs aren't the only driver, because the tariffs aren't a factor for Asia-Europe trade. So that means that these other factors were reasons for an early start for Asia-Europe as well. For both these lanes, though, another factor which might keep rates and kind of volumes or bookings higher than maybe they otherwise would have been at this point, because ideally things were front-loaded, is congestion. So we had some pre-existing congestion at some of the major hubs in Europe, but really primarily in the Far East. And these are getting worse because of the big increase in demand and also because of bad weather. There's been serious fog, so there's been serious congestion in some major ports like Shanghai, Ningbo, but also in Singapore, in Korea, also in Sri Lanka. So there is congestion adding on top of this, which could stretch how long rates stay at their peak, just because capacity is being reduced and there's still this backlog of demand that still wants to be moved, and otherwise it would have been moved already. So it might stretch a little bit further on than it otherwise would have, given that a lot of the aim was to pull demand forward.
Okay, interesting. And moving on to air cargo now. Are the changes in oil prices having any impact there?
So no dramatic impact compared to where we've been, over the last maybe month. But as we said, in air cargo as well, jet fuel prices have come way down from where they were in April. They're only about 15 to 20% higher than their pre-war baseline. So that's still elevated. And we've seen something similar in rates. They haven't come down maybe as dramatically from peaks that they hit, earlier within this wartime period, but they're definitely lower than they were and more or less level now, but at elevated levels. One of the bigger stories in air cargo right now is that the EU canceled its de minimis exemption, and that happened on July 1st. And there actually was a pretty significant drop in capacity. So as we've said before, de minimis is a big facilitator of low-value goods going by high-cost air transportation. And when this happened on the Transpacific, when the U.S. canceled their de minimis, there was an initial, very significant drop in volumes, and then a kind of a gradual recovery. So we've seen a meaningful drop in capacity, but we'll probably see some kind of adjustments and leveling off as we kind of move, as the industry adjusts.
Right, interesting. Okay, that is all we have time for today. Thank you, Judah. If you enjoyed this session, please hit the subscribe button and you'll get notified about all our future episodes. Thank you for listening and have a great day.